Today is the last trading day of January 31st, Friday here. And unfortunately, this is kind of midday. I wasn't able to get to a video this morning. Unfortunately, I was out of the office, but I'm back, and the market has really staged a nice rally today. And this is what I see coming up for Monday. This is what I'm looking to do. And this is kind of like my little analysis here of what I'm thinking. First of all, look at this. The market made this low a few days back, then retested it 2 days ago, and then today tested it again. So we got a potential little short-term triple bottom where this market could definitely move higher now, okay? That's what I'm looking at. I'm looking to probably buy weakness on Monday, and let's draw some fibs from this last major swing low up to the all-time high, and look at where the 38.2% retracement falls. All right, you got the 38.2%. Oh, no, I can't draw here. Got the 38.2% retracement right in here. You can see that right over here, see? 38.2. Granted, the market has taken out that 50 exponential moving average, okay? We could drop to that 200 way down in here. It's almost 100 points lower. The big level now are these three lows, all right? I think you can definitely be a buyer in here with the stop below these lows. If the market takes out these lows and can actually close below the lowest of these three lows, if we can close below, let's see, today's low is 64 3/4. Wednesday was 64 even. So the lowest of these three lows is 1764 even. That's a big number. Again, if the market's able to close below 1764, okay, I think the market will definitely try to push and hit that 50% retracement at 1740 1/4. The next level will be down here at the 61.8% at 1714. But seeing today's rally and, you know, the second test of this initial low that was put in place on January 27th, right? Again, January 27th, the day after the big sell-off last Friday, we hit that bottom of 1767. We bounced up, came down, tested that, took it out marginally, bounced up again yesterday, and then gapped lower today, testing these lows, and then staging a pretty healthy rally to the upside. So my upside target now is back, at least back to that 50%, 1798, testing that 1798 to 1800 level. Okay, so that's about a 15-point move up from here. If we can close above 1798 to 1800, I think our next move up would be to the last Friday's high of 1812. But I think you can be a buyer in here with a relatively tight stop below these lows. All right, so hope that helps. And again, tomorrow, Doc is putting on a webinar. I urge you to go to tradingconceptsinc.com/trading. Remember, it's trading-iron, right, -condors. So I urge you to check it out. He's got a great class, and then a week from tomorrow, he's got another great class coming up, both on iron condors. So I definitely suggest you do that. Let's just quickly look at a 3-minute chart. Again, I wish I had been here this morning because this provided a great buying opportunity down in this level. Again, you have a gap opening like this. The market right out of the gate tried to fill that gap, started filling that gap without ever taking out that first opening bar's low. Remember, this is a 3-minute chart. The market never even attempted to take out that first 3-minute low of 1764 3/4, and from that point started making higher highs and higher lows consecutively. All right, and then officially, based on my software, the trend changed from down, right, because it was a big gap. That's why it was down, even though it was trending up intraday. But right in here is when the trend officially changed from down to up on an intraday basis. So when you get that, you definitely want to buy on weakness, right, while the bars are green. And so the opportunities were right in here. for that up move. And if you take it just one step further, real quick before I end this video, so you draw those fibs from the low of the day until this high just above that 38.2% retracement. Hope that helps. Have a fantastic weekend. I'll be back with you on Monday. Bye for now.